Hello, I'm Margaret McAlister, and this is the PEST on McAlister Mortgage Company. So I'm going to start with political, and the first one would be we have a new presidential party in. It's gone from Democrat to Republican. Government policies have already started changing. Trump eliminated the fee reduction for FHA loans that Obama implemented in January. I actually have a friend that got a FHA loan in January because of these fee increases, and now she ain't gonna get them. Another thing that falls under political is government term and change. So every 4 years, we vote, and whether it stays Republican or it's going to be a Democrat, and what they're going to change or keep is going to influence mortgages. Home market lobbying groups and pressure are another political thing to look at. Their financial institutions and mortgage lending have lobbyists, and especially through the years 2000 to 2007, they were really pushing more relaxed lending standards. They found that delinquency rates were higher in areas in which the lobbying lenders were really pushing what they wanted. People that were involved in all this pressure group lobbying thought that they would be bailed out if they went under, and they were really only looking at the short-term gains. So it might be, as we are in this new administration, they might weaken the political influence of the financial industry, and these lobbyists may not be as powerful as they once were. And the last one is current legislation, home market. So those that voted for Trump, the red states, are very confident and will probably be more likely to invest, where those that did not vote for Trump, the blue states, are a little bit more hesitant to jump in and do anything at this moment as far as investing. The next category is economic. So one thing under this category is interest rates rising. And since Trump has come in, they have already started rising. And it looks like that's what the trend is going to be. The home economy situation. Right now it's a seller's market, and the inventory of houses is just not there. Home economy trends. The trend is a seller's market because prices are going up, so you have to act fast. I know someone, he and his wife just moved here, and he said they had already lost out on 3 houses because they did not act fast enough. Job growth and unemployment. It's stable and growing at a small percentage annually. And consumer confidence. As I said before, it ties into the reds are confident, whereas the blues are not as confident. The next category is social. So consumer attitudes comes under this. It's more positive since people are spending money now, as it once was a couple years ago. Lifestyle trends, the changes. Is the trend to downsize into a condo, not have to mow the yard? And we're moving into a time when where our population is increasing as far as the elderly population. And they are probably going to want to downsize and not want to have to take care of so much maintenance. Also, living standards. And what are the attitudes towards work and leisure? How much time is there for leisure? Occupation and earning capacity, and what are the roles for men and women? How long is the population going to live? Over the past, the past like 10, 20 years, it keeps on getting older and older and you live longer. Does the population have a strong or weak attitude on green issues? Because the government is offering incentives if you implement green into your house. There's also the media views. So what the media view is right now, as far as the mortgage field, the status quo hasn't changed, but a horde of new home buyers may be left out of the housing market. Effects of the Trump administration will likely play out along the party lines, and rates are expected to rise but face volatility, and home prices are expected to rise as well. There's also the consumer buying pattern. They're buying more frequently, they're spending money, as during the economic fallout it was stagnant. And the demographics include age, gender, race, and family size. The families aren't as big now, so you don't need as much house. And I just previously mentioned about our population is becoming a greater percentage of elderly. And the last one under social is major events and influences. And I'm going to use 9/11 as an example. As you know, it had a huge influence on the mortgage market and on the interest rates. Interest rates went down, the housing market went up. So anytime you have a major event like that, it is going to affect the mortgage market. And the last category is technological. So the first one under this is mobile applications. So the applications can facilitate the loan application, the status of the application, access their account, and they can make payments, and it has a payment calculator. It's a very quick way to find out about your mortgage, anything about it. There's also competing technology development. As a mortgage broker, since I work with a lot of different banks, I use multiple level of banks that I can place my multiple level of clients into. Also, associated dependent technologies. This is dependent upon the tablet and the phones. And as they change, the company needs to be adaptable and need to be able to cross-platform, like between the Apple and Android. There's replacement technology and solutions. We need to be able to change and adapt to technology, even the smaller devices, like watches. Maturity of technology. Right now, it's at a plateau due to the fact of the longevity of like the Apple and the Android. They're just coming out with updates. And there's information and communication. It's within minutes at this day and time. You can get the communication via mobile or Wi-Fi devices. Anywhere in the world you can get answers within minutes. And the consumer buying. The percentage of people carrying mobile devices in the United States is 89% smartphone owners. So this is the PEST for McAlister Mortgage, and thank you for listening.